Hello, everyone. Welcome in. Sorry for the brief delay. We should get started in just another moment. Going to allow people to properly be able to funnel in that have been in the waiting room. And then just have to do one thing prior to getting started. It should be just another moment. Oh, there we go. Perfect. Um, just going to change your name real quick.
Oh, thank you.
No problem. All right. All righty. I'm going to kick things off if we're all ready.
Great.
I think we are.
All right, perfect. Hello, everyone. My name is William Mucker. I'm a client executive with Camaplan, and would like to thank you all for joining us for today's webinar, Strategic Wealth Building, Exploring Alternative Investments with Sequoia Fund Group with Monica Brogue-Waltney and Ada Catino Hernandez. As a quick note, please be aware that we will be answering questions at the end of the presentation. However, feel free to use the chat and or Q&A function on your screen to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we do have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time when you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open that account, fund that account, and facilitate the transaction into that investment. Here, lastly, is our contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact us. We'll be more than happy to help. And without further ado, I'll pass the controls over to you.
Fantastic. Thank you.
Of course.
Yeah, so I am Monica Brogue-Waltney. Oh, I'm so hoping this is it's only letting me share my entire screen.
Oh, there
So
should be an option to do a window.
it's not right now, so I apologize in advance if my calendar invites pop up. Much going on there. I don't want to stall the program just for that. So make sure we're in focus. So I am Monica Brogue-Waltney, and thank you so much for joining us today. So our passion here is strategic wealth building, and we love to explore the alternative investments. So with Sequoia Fund Group, unlocking the wealth creation strategies through diversified investment strategies is extremely exciting and important to us to be able to provide those opportunities. Another thing that Sequoia Fund Group presents is the customizable opportunities. So we don't just have one market that we're looking in. And we're very passionate about the opportunity for legacy planning. Our team is myself, Monica Brogue-Waltney. I'm a strategic consultant specializing in the asset growth and preservation. I do a lot of estate and business planning. Keeping wealth in the family for generations has been my passion. Ada Catino Hernandez is my business partner, and she is a financial concierge. She comes from an engineering background, so she has that precision, analytical thinking, and a passion for legacy building. And I think together we make a great team. So our inspiration in creating Sequoia Fund Group was we were really looking at what really represents who we are. And the sequoia trees are very resilient and interconnected being. Their root systems rely on the entire community around them. And we thought, wow, that really represents the idea of what we're trying to do for our clients. So, it's not just us having the experience and we're the know-alls. It's us leveraging other people's expertise. They are the experts in their niche market. And so therefore they support that community that we're trying to build. So our mission is to provide investors with a single source solution for accumulating, preserving, and planning for generational wealth. No one is in the same position ever as far as their asset preservation or their wealth accumulation strategies. And so we really take it to heart, and we're very passionate about building that wealth for you and helping you to pass it on. Our philosophy is like the Sequoia. Our strategy emphasizes on the foundations of diversification and collaborative growth. We're going to introduce to you a couple of ideas that we base our strategies on. We serve investors that are seeking for options beyond the traditional markets. I've found that in my own personal journey, I could go to these different brokerage houses, and they're all fantastic. There's a place for everything. So let me say that in the beginning. There's a place for each type of investment in the portfolio. It's timing, and it's, if your risk tolerance provides for it. So I'm not going to say there's any one bad investment. Is it right for you, right? So I was looking for different options outside of the market because I didn't want to put all of my money into one place and just set it and forget it. It wasn't working for me. So I became a financial advisor to learn a little bit more about the opportunities I could bring to my clients in the business strategies that I bring to them. We also serve individuals that are looking for that passive income. If you're really wanting to not have to deal with hands-on servicing of rentals, or just being in the know and always having to have control and be in the mix all day long, if you want to just work, do your thing, and have the passive income, that's what Sequoia Fund is looking to do for you. Our business owners, there's a lot of different opportunities that you have because you have more control over your money. And so we like to offer some diversification strategies for you to help you plan for your retirement and have an exit strategy. Our risk management is really important to us. As you know, business cycles are cyclical. Industries have different life cycles. And we're seeing a recreation of things with the invention of AI right now. That'll be exciting to see because it kind of reminds me of when the internet first came into being. This is just taking it to a whole new level. So diversification across the asset classes and the regions is very important to us. So where is the technology happening? Where is the different booms in real estate happening? Where are the different opportunities offered? So we look at what are the growth cycles in the areas that we look to invest, create strategies for our clients for. Our due diligence is very rigorous. We have a vetting system. We talk to other fund managers. We spend a lot of time talking to people. We have a checklist. If they don't meet that checklist, we let them know what our expectations are. If they want to come back to the table, we're always open to a conversation, but we're very strict on what we will allow into the fund. And then transparency. We love to communicate with our clients on the performance updates, where we're at, new things that are coming on the horizons. There are bumps in the road that happen with different industries, and we definitely want to make sure that we're talking to our clients about those before they have to come to us with concerns. We're definitely like to keep our finger on the pulse of what's going on and options to help mitigate that risk for our clients. I think the most important thing about risk management to me is to balance the risk across the different asset classes. Ada, do you have anything you want to add to that?
Not really. I think you did a really good job. But I think that it applies both to our fund, but also when someone looks at their own personal portfolio, to really look at the diversification and then how you're doing each of these things, right? Does your personal individual strategy have kind of some risk mitigation? Is it diversified across different asset classes? Geographically, is it the growth mechanism that vehicle is using? So if you're all in real estate, if you're all in the market, then you might be in different properties, you might be in different stocks, but ultimately the growth mechanism is the same. They're probably following very similar trends. And so really thinking beyond that when you think about the diversification and how you're doing your due diligence, how you're building out that portfolio, and or utilizing strategies like Sequoia Fund Group that helps you to kind of access that really easily.
So our strategy includes real estate, as we've been talking about. We look for high yield, we look for value add, we do some REITs, we do some different types of asset classes. I don't know what everyone on the call is familiar with. So I think it's important to understand that real estate has its own, it is in itself its own alternative investment. But there's so many different asset classes inside there. There's your multifamily, there are REITs, um, uh, there's people who just wholesale and flip just individual homes. I mean, there's so many different ways to own commercial real estate. So those are the different types of strategies that are available within the real estate class itself, and also looking to diversify across regions. Where's the growth happening? Where's the boom for the infrastructure starting to be built? You know, looking at those different things are really important to understanding how real estate is going to develop. And if you can project at all what the sprawl will look like in the areas that you're investing in your real estate classes. Some of the other alternative investments that we really enjoy talking to are the oil and energy for immediate cash flow. There's a lot of different strategies out there. We're vetting some different new energy opportunities in that space that they really provide a definite different direction that you can go other than real estate. And I think now is the time to start looking at different energy classes to understand what is the trend that's going to be coming in Q1, Q2. Are you going into the end cycle of an energy deal, or are you coming into new energy? So we're constantly looking to vet out those types of opportunities in that space. And the same with the technology startups. I think with the invention of AI, it's just the perfect time to start looking at the different technology groups. And then again, there's other asset classes outside of that with that we've been talking to help understand how to further diversify the portfolio for the clients so that their strategies are complementary if there is if we can provide inverse relationships when there's a change in the market. Some of the other things that we like to use to help offset some of the other industries are the debt, and our debt is collateralized instruments. There's definitely a stable income that comes from that. And then we also use equity plays, which a lot of times those are buy and hold. They're long-term, but they're high returns. And so as you can see, diversification within a portfolio doesn't just mean buying different stocks, bonds, mutual funds, and some of the life and annuity products that are out there, but it's also complementing those strategies outside of those markets. And how do you access those, right? Some of the projected returns that we're seeing right now and actual returns that we've been seeing are averaging 8 to 12% on our debt investments. The real estate equity, we're seeing 10 to 20% IRR. It depends on the project. Where it's at in the development phase, I think that something to understand is when you're getting into these different opportunities, the returns will be higher because the risk is higher when you're looking at development phases, going into different portions of that different development phases of a project. If it's not cash flowing yet, you're taking a little bit higher risk. So you would expect a higher return. If you're coming in at the end game where it's just cash flowing, you might expect to see lower returns, but that doesn't mean that they're low. Alternative investments, we're seeing anywhere between 10 to 15%. And actually we have some that we're seeing much higher than 20, but I won't quote that on a document because nothing is guaranteed, but we're seeing a lot of really high returns in the different markets, and they're exciting opportunities. Something I think I'd like to share with you on your when you're looking at the alternative investments is understanding what portion of your portfolio belongs in that, because you don't want to throw all your eggs in one basket, right? So you want to understand if I'm buying and holding and I've got a high growth here that's going to pay 10 to 15% or higher, but I'm not going to have any cash flow. how much of my portfolio should I be putting into that piece of it? Now, if I have something that's going to produce income, how much of my portfolio can I afford to put into that? So that's something that's needing to be discussed about your goals when you're looking at the projected returns that you're expecting, and also the allocation of your assets when you're looking into investing into alternative investments. Again, the timeline, we have short-term cash flow opportunities that pay immediately on quarterly returns. The distributions are quarterly, and that's something that helps you build your cash and keep your budget flowing so that you're not having to stress about how you're going to pay your bills, but then you want to make sure that you're preserving the assets, and sometimes your buy and hold, the long-term strategies offer a much higher return, but you're not going to get any immediate cash flow from them. So you can expect anywhere from a 3 to 5 year exit strategy on those. Ada, do you have anything to add on the projected returns?
No, I think you covered it. I think when we talk specifics, it'll start to come together.
Perfect. So we wanted to talk a little bit about some case studies for some clients that we see looking to explore different ways to stretch their budgets and preserve their assets. So I have an impressively young couple that the husband is retiring at age 52. The wife is 47, and actually the husband is retiring September of this year. So this is an actual case. And he has a pension that's going to be coming in, and it's approximately $9,500 a month before the taxes. They have 2 young children, and so one's getting ready to start college, the other is getting ready to start high school. So if you look at the scheme of things, although the husband is young, he's got 13 years to qualify for Medicare. And so we need to provide for the medical expenses. And I think that was the biggest concern in the conversation, because that's going to eat into their budget, and it's going to continue to grow in cost. And it's an unknown number what that medical cost will be for the next 13 years. The wife has 18 years before she qualifies for Medicare, and the children will be dependent on their, it's 26. They'll be dependent until they're 26 years old for health insurance. So that's a big chunk of change out of your monthly budget. They're not worried about the income so much, but they are worried about the medical expenses. And so if we can find a good way to pay for that, and not hurt our annual budget, and keep up with the cost of inflation and different things that go up every year, our cost of living, then that's what they wanted to look at. So their solution is to use the 401k for the health insurance, but it's not a very large 401k, so it will last approximately 18 months. And so the issue that we discovered with this is it's going to increase their out-of-pocket expenses that we have to plan for in month 19. So looking down the road, what can we do to offer some type of risk mitigation that they will run out of money and have to go back to work? So our strategy, I need to move my screen here. What we'd like to do is to invest to preserve the capital and have interest to offset the cost of insurance. So basically, what instruments are there out there that you can invest in, take the interest, and then either roll over or do something new with the principal as that contract matures? So there's a buy and hold strategy. First of all, to have a small portion of the income, a small portion of the assets go into an opportunity zone, which is a buy and hold. It's high risk, high reward. That's a growth potential. It's a very small chunk of what is offered there. We would like them to invest 100,000 in one of the strategies that is offering a 12% return. That is paid out quarterly, so that gives a $3,000 every quarter to add to the amount of money that they need to make up the difference for the cost of insurance. But we're still short. So investing 100,000 into a different asset that also has a higher return, that one's a little bit more volatile. volatile, I'm sorry, but the return is anywhere between 12 and 20%, which I know there's a a difference in the numbers there, but there is an opportunity to earn the 20%, which gives us another 24,000. That clearly makes up the difference in what we're needing on an annual basis to provide for the medical insurance, and I believe it will keep up with the cost of increases on those premiums annually. The funds from the interest payments, they won't be needed immediately if they implement the plan immediately. And what's nice about that is by the time the first payments are coming, we're already able to start offsetting the cost of those payments because we've got these $3,000 every quarter coming in. And then after year one, they'll start having more than enough and can divert that other balance of what's left over of the 401k into something else to help preserve it and grow. So I hope that made sense. Ada, I think this next one is for you.
Yes. Okay. My screen is frozen, so I don't know if it's loaded on your end.
My share stopped. Stand by.
Okay. So while she's loading it, I can tell you that this individual is a single woman. She's 73, and she does have a pension. She has Social Security, small miscellaneous other income. And so she's been retired for quite a while. She's been living really comfortably, but hitting 73, this is kind of a bad time for it, right? So all of her insurances, she's seeing these cost of living outside of just inflation and all of that. She's seeing the cost of things increasing pretty dramatically and expecting it to continue. And then with the inflation, with the high interest rates, she's also seeing just the cost of living that everyone else is experiencing. Groceries are so much more than they were. And so her income is no longer keeping up. So as we dug into it a little bit more, she contributes annually to a charity, and she wants that to continue. At this point in time, it doesn't matter, but it does come into how do you manage your money when that's your objective. You want to go to her solution next? So when we first met, her solution was to take money that she had in an annuity that had a guaranteed income option, and she was looking at turning it on so that it would give her this increased cost or this increased income to help compensate for the cost of living. Her concerns with it were that it would spin down, and so there would be nothing to leave for her charity after she was gone. The other big concern was if this cost of living continues to grow, if we see the cost of groceries continuing to increase, her income was not going to keep up after that, right? She could give herself a bump now, but 5 years from now, she didn't have anything else to turn on to increase her income again. So our solution was really to diversify. So it was to, let me move my camera just a little bit so I can see this. So it was to move some of the money into a buy and hold, moving it into a multifamily property. This gave her growth so that in 5 years, when she needs another bump of income, she has a chunk of money to move into an income strategy. We then moved money into another real estate backed investment, but it was cash flowing. So they're paying out quarterly. This starts giving her income. Also moving money into some collateralized investments, again, giving her income. And then moving money into a semi-liquid collateralized investment that was not real estate. So really focusing on that diversification. She's now invested in several different parts of the real estate market, and then moving into something that's not at all related to real estate and still giving her that monthly income because it's a debt investment. And then with a focus on that, wanting to really make sure that there was money to contribute to her charity and to keep it going, we moved some into a higher risk, higher reward strategy, a really small chunk of her money compared to everything else. But that's really long-term planning. So she was looking to get $500 a month more. With this, we were able to get her over $1,000 a month more, but not have any spend down. And so with some of these options, she can turn the income on and off. So she is intending, right? This is being implemented at the moment. And so her intention is to actually not turn on every income stream immediately, but to turn one on, see how that is, and then, you know, say next year, she said she's planning to turn on the next one, have a little bit of growth in probably the debt or one of the real estate income strategies, and kind of just stagger it so that she can live really comfortably, maintain her lifestyle without compromise, and be able to pivot at any time. Nothing's locked in, and, you know, it's not a lifetime commitment for her.
Very good. So here's our third case study. This is a client in her mid-30s. She has a small IRA from a prior position. Current job offers a 401k option with her employer. She's interested in wealth accumulation, concerned about market volatility, and she just wants to diversify into a more stable strategy. So I think that having that mindset and being able to diversify at this point in her life, she's going to do very well for herself. So her solution was to participate in the 401k and hold it in cash position right now because of the there was some uncertainty. It just depends on the day. I mean, we saw the stock market change yesterday, and I anticipate a lot of volatility through the next year. So she's going to participate, but take that 2% match from the employer. She also has some inherited rental properties that produce income, but she really didn't have much of an idea after that. Ada, did you want to add anything to her solution? And I'm going to have you go ahead and present her our solution for her.
Yeah. So with this one, it's a really different scenario. First, because the time horizon is so different. The need for income is not immediate. And she's working with a much smaller chunk of money. So one of the key things that we talked about was the accumulation, but also really focusing on meeting, you know, all investments have different minimums. And so looking at what she qualifies for, and then every time she hits a new minimum, saying, hey, do we want to diversify into this next investment? Monica, can you change to the next screen?
Sure.
So basically what we talked through with her on this one was looking at the value in her old IRAs, right? She's contributing some to that 401k. She's getting the match. That's great. Everyone loves free money. So now we're talking just about the old IRAs. There's no free money there. So it's about the growing of those. So moving some of that money, most of that money, into an investment that's going to have the flexibility that she can contribute small amounts, right? So nothing with a big threshold. You have to have $1,000 to come in. You have to have $10,000 to come in. Really, hey, I want to put in $200 or $300 a month. I want to put in $500 a month. That kind of flexibility for her. And then as it hits these thresholds that allow her to roll into the next investment, doing that. So it's a little bit more intensive in terms of the monitoring, but it really is, you know, hey, once a year, we're going to check the balances, and then we're going to update it so that you're maximizing the growth potential. So for her, it really is looking at some 10%, an investment with a 10% pref. She can get into that right now. She can contribute to another sort of investment with a lower threshold and a little bit lower interest, but as it accumulates, she'll be able to roll it over. Because of her time horizon, we're looking at some buy and hold strategies. So the one that we talked through has a $25,000 minimum. She'll be able to hit that by the end of the year and roll into that while still maintaining some money that's growing at that 10% pref that she can contribute to, ongoing. And then at the end of 3 years, when she gets her money out of the buy and hold strategy, well, then it'll have grown and she'll have the original principal, of course, and so be able to pivot again into the next thing that makes sense based on where she is in her life, based on what's available in the market. So really focusing on the growth and just kind of leveling up each time there's an opportunity to do that and keeping that diversification in place.
Great. So that's a lot of different examples on what diversification can be. And so educating yourself is super important on understanding first of all, understanding what are your goals, what's your time horizon, do you have long-term care needs that you're providing for, different options for everyone, right? And understanding how to navigate all of that is not your responsibility to know that all. So we encourage you to really educate yourself on, first of all, what's your goals and what are your opportunities for that? And what are your savings vehicles that really feel most comfortable to you? That is not something that you're going to have to navigate on your own. We obviously would love to have the conversations with you, but to educate yourself on the different opportunities that are out there and to understand your goals is super important. So we valued in these case studies, we valued the client's opinions because we definitely don't want to offer an option in a strategy that's going to just be so uncomfortable. They would rather do nothing because they freeze from what we like to call analysis paralysis, right? So really feeling comfortable and educating yourself before you move forward with any strategy is very important. Let's see, I can't get this to move forward now.
So
Go
yeah,
ahead.
so this has all been really good from like a 30,000 foot view. I wanted to kind of transition and talk about, you have the slide up now, or Monica, have you go into this initially. Let's talk about some specific investments and the things that are highlightable about it, things to know, kind of key elements. So Jackson Gate Hospitality, tell us about that.
Yeah, this is an example of one of the real estate opportunities that we vetted and we're just sharing with people today, just to give you an idea of the different types of opportunities out here. This isn't something that you normally find offered to you. It's out there. It's out there for everybody. There's a lot of different opportunity, but it's not something that you hear when you're just sitting around talking with your friends and family. Hey, I've been looking at this strategy that involves a hotel. Unless you have millions of dollars, it doesn't happen. So looking at an opportunity to get into a strategy like this is kind of fun when you can do it with a lesser, allocating less of your assets to it. So the offering is a hotel build. They're calling it Jackson Gate Hospitality, and it's located in Northern California. Excuse me. The operator is extremely experienced. I think he's got 50 plus years in the industry, and his son is his business partner in this, as well as several other people. But his son is at the helm of operating this particular project, and he is extremely well versed in both international and domestic real estate builds. Among other opportunities. They're offering a preferential of 12% for a minimum investment of $25,000. That's going to be accumulative. So this is more of a shorter term buy and hold. By year 3, they'll start paying out their quarterly payments, and you're going to accumulate that 12% starting day 1 from your investment. There is a 5-year exit strategy, so with an opportunity to reinvest those funds for the second phase of the project. They are currently in the development phase, and they are moving at, I would say, lightning speed compared to some of the other projects that I've seen, and just making headway with all of the different permitting and relationship building and signing contracts with management companies and what have you. Their primary clientele that is the attraction to this happens to be a mix of tourism and municipality workers. There is a definite need in this area for a long-term stay. opportunity because you have workers that come through, and I don't want to say it's a remote area because it's a growing area, but it's out in the country, but it's definitely a fast growing area. There is a main thoroughfare highway that goes up to the main ski areas and the wineries and all of the different tourist attractions in the area. And there's just not the housing available to accommodate the tourists and the workers. And so we're processing the commitments in the order that they're received, because this is something that is not always available to people for such a small amount of investment. Excuse me. This is a picture of the finished product as it's projected to be. It's a 96 room for mixed use. Excuse me. They're currently working with the transportation department on, I believe they're getting public transportation close by, and obviously there's going to be some other things. There's going to be restaurants and coffee shops built on the 2 properties that they own in there as well. Like I said, the relationship with the city is 40 plus years. I think it's actually 50 plus years. The gentleman that's the operator has built up many of the projects in the area. So why that's important to us is that here comes that education on vetting the different projects is they have a relationship with the city. They know what the city wants, and the city understands what their integrity and their output looks like. Again, there's many wineries in the area that draw, and there's a massive amount of traffic that are going to be going right by this hotel on a daily basis. Their financial projections, I guess I took out the information on that side. They're conservative. They're not wanting to paint pie in the sky, so their low is they're saying that they're projecting a 1.85, and I believe that the high or the range is a it's 2.35. Ada, do you remember the projections on that one, the high end of it, the range? I think she's muted. So if you could look for that, Ada, that would be great. But I believe it's 1.85, and it's either 2.
So overall, over the course of the 5 years.
I apologize, it's cutting out there. So so over the course of the 5 years, there will be a return of 1.65 up to 2.15, we'll say conservatively. They're definitely in the market. They're in the right place, the right location, and the right timing for this project to happen. So something that to be educated about and learn about more, and we're happy to navigate that with you. Also, a second strategy that we wanted to highlight that's a little bit unique and different for the opportunity. This one services government contracts. They are also in the development phase, so high risk, high reward again, but this one has a very unique opportunity in that they serve both the private aviation and government contracts. They're located 15 minutes from an area in northern Nevada that is now known to be like the next Silicon Valley. They're building data centers like crazy up there, and it's only 15 minutes from there. And there's 2 airports involved in this project, as well as a software project that's held within it. This is a opportunity zone, but you have an opportunity to come in as a strategy just to build your wealth and or as a debt play. Government contracts for the airplane hangars that service and upgrade highly sensitive equipment. That's really exciting to be able to offer that. Not everybody has that in their strategy. The funds have already been approved, and they're set aside. They're waiting to be billed for the different contractors. And the other thing that I think is important to highlight about this project is that you can't just open up an airplane hangar and say, hey, I want to service government contracts. That goes into that, and they have all the clearance, they have all the certifications and all the right people in place. Excuse me, there's a software component to this project that is being developed that is highly immutable, and it's traceable, and it helps with all the Made in America, the ITAR, the HIPAA, all the different industries that require that. And people say, okay, well, everybody's trying to do that. Everybody's trying to do that, right? But they have a special skill set and knowledge of what the needs are for these government contracts so that they can service these high-tech aircraft. I wanted to just show a real brief section. There's $2.4 billion, as I said, that's already been approved back in 2019. It's just sitting, waiting to be billed. That is not going to be removed in these current looks overs that are happening with all of the budgets. This is staying in place. So we're talking about high-tech airplanes. We're talking about this high-tech hangar that's being built. Now there's more to this hangar that's on the bottom. There's more buildings on this property. This is located right by Highway 50. And what I was talking about is the new Silicon Valley is literally 15 minutes from here. And this is one of many hangars that's going to be built, and they're looking to just be pushed over the finish line for that certificate of occupancy. We're probably about 2 months away from that. And then the smaller airport is going to service the community, which also will allow for private jets and community services like the fire and life flight, and again, private aviation, fuel sales, and that type of thing. So it's quite an exciting opportunity that not many, I don't see a lot of this offered out there. So if you're looking for something truly unique and different and want to learn more about that, we're happy to educate you. So let's talk about Sequoia Fund Group and the simplified process. So you have your funds in your your IRAs and your Roths, and you want to be able to have a simplified process to have one marketplace to go log in and find all of your investments and look at different options that are out there and have more control over what you're investing in, but you want to have that passive income. The other thing that is offered through us is that cost efficiency. So you're making one transfer, which is cost savings on, and over time when you're doing multiple different, I have some clients that have multiple different TPAs, it gets expensive. So if you can just use one like Camaplan and have that single transaction, it makes it much easier. The diversification opportunity and the customizable opportunities are there. You don't have to go into any one strategy. You can pick and choose to your liking. And it's an excellent way to learn how to do legacy building and create a financial plan that is a great exit strategy for your business. And again, like I said, for future generational wealth building. Ada, did you want to add anything else to that?
I can speak a little bit to kind of the competitive advantage. So some of it you already spoke to, right? The one-stop solution, having access to a single login, and then you can see a diverse range of different opportunities. Another part of that is that you can then go in and do your own due diligence, because we do make accessible the documents that speak to the vetting process. So a lot of the documentation that backs up what the different investments are doing, how they're managing it, how they're mitigating risk. The expert management. So if you move into an investment, you still have somebody who's working on your behalf that is watching how it's performing, that is keeping you up to date with those. The transparency. So this is really, really critical for Monica and I, just from our own personal experience and our own values, that we have open communication with our clients, with our investors, and that we are updating you regularly when there is something to be updated about, or just a general update. Stability and growth. So understanding how to balance that, and then making both opportunities for growth, opportunities for income available, and really opening up opportunities that are more stable. I personally started my investment journey in the market, I think, which is true for most people. And I experienced not having transparency, not having someone to call, and then watching my portfolio go up and down. And I thought, this is not what I want. And so I strive every day to ensure that the people I'm working with are experiencing something very different. I did see a question come in that I think kind of speaks to this. So I think Monica wrote an answer, but let me just answer for everybody. So you can invest with a self-directed IRA. The question is this self-directed IRA with CAMA plan? So Sequoia Fund Group is a customizable fund. So if you have a self-directed IRA with CAMA plan, you can use those funds to invest in Sequoia Fund Group. If you want to invest directly, so you have cash you want to invest, you can invest directly with Sequoia Fund Group outside of a self-directed IRA. And then within Sequoia Fund Group, you then have the option of looking at all of these different investment opportunities and choosing where you want to allocate, how much you're allocating to each of them, kind of diversifying your own personal portfolio within Sequoia Fund Group.
Right, developing a strategy within utilizing the different strategies that are in the fund. So absolutely. So let's share with you how that works. To become an investor with a single qualified account transfer or cash. So thank you for asking that question. And step 2 is to go in and educate and do your due diligence and select the opportunities that align with your risk tolerance and financial goals. Have that discussion. We're always available to help you identify those if you don't know what they are, and to definitely we offer a ton of educational information on all the different opportunities that are out there, and then and also just general market education, so of the different asset classes. You can enjoy a hands-off, professionally managed investment experience, and then you monitor the growth through regular performance updates. So again, we're definitely very big on communicating. I think the worst thing is to make an investment in something like this and then they ghost you. We've had a few experiences where we've had fund managers who just were not communicating, and not within Sequoia Fund, but just over my lifetime of my career, we've all seen it, right? And companies disappear. It's like uncomfortable. So one of the things I think that I should go back to on the risk management is we not only vet them on what their experience is, but how did you do? We've got expertise in the markets where they've experienced the 2000s, the 2008s, and all the different ups and downs in the markets. And so we want to really understand, you should be making money when everybody else is making money, but what are you doing when we have a market correction? How does your industry deal with that? And what are you specifically doing to help our clients not lose their money? So if you're not accredited, reach out to us. You can still assist you and teach you how to become that. If you are, we're happy to guide you in the different opportunities within the Sequoia Fund Group strategies. So with that, I think we can open it up to any questions we might have, William. And I'm going to put up, here's our contact information, but I have a QR code on this page for anybody that would like to learn more about how to educate themselves in the alternative investment markets or anything that they've heard about today.
Yeah, perfect. A lot of great information there. Thank you for that. Like Monica said, if anybody has any questions, please use the chat and/or Q&A function on your screen to ask them now. I know we have about 8 minutes left, but we'll try to answer as many questions as we can. If you have a question, I say this a lot. If you have a question that you're hesitant to ask, somebody else probably has the same question, whether it's now or they're watching the recording later. So you're doing somebody a service if you ask the questions now. But Monica also provided the contact information if you want to take these questions offline, excuse me.
There we go. Yeah, so so I'll leave this QR code up. We've got a few more minutes. I can't see the chat. I'll end up minimizing the screen, so I'll let you guys do that.
Yeah, absolutely. No questions at the moment. Sorry, not to cut you off.
Okay, great. No. Fantastic. Well, please scan the QR.
Yeah, so we just had one come in. What are your fees? That's an excellent question. So it should be a simple question, and it's not. The answer is that it depends on the investment, and they are every investment, when you look at the data, it is described in there. I can tell you that something that we have prioritized is that if you find an investment, if you come into it through Sequoia Fund Group, you will get the same or better returns than you would if you went out and tried to find them directly. So that means that we have either negotiated with the investment opportunity to get a better return, or we've negotiated that our fees are covered by them. However, that makes sense. You're going to know about it. And even if there is a fee, it's going to be the same or better than you would get if you went out and found that investment on your own.
It's always disclosed up front. We have deal disclosures that you can see on every single deal that's out there. There's a data room that you have access to. And so, yeah, excellent question. Thank you for asking that. So we do have another question.
Yep. I can speak. I have it pulled up. Is this only for accredited investors? So Sequoia Fund Group is only for accredited investors. However, not all of we do have opportunities outside of Sequoia Fund Group. So we're specifically talking about this customizable fund, but we also deal with other opportunities and other ways of investing that non-accredited investors can take advantage of. So if you're not accredited, or if you don't know, then reach out to us and we will be able to share that information.
Correct. Now, some of the opportunities that we've shared today are for non-accredited and accredited, and some of the options are specifically to accredited, and happy to share that information with you. So please scan the QR code. And what happens is we set up a 15-minute fit call. So you can ask those questions, whether you're accredited or not. We'd love to have that conversation.
Perfect. There are also some questions coming in the Q&A section. Jim said that the QR code didn't really work on his phone. Is there a website that he can visit?
Yes, it is sequoiafundgroup.com. Let me put that here.
I will also pull up a link.
You want to put that in the chat there? And
yeah.
And there's a contact form on the website, so you can just put your contact information in there. So I apologize that that's not working on your phone. I thought we tested that out. So hopefully it's not everyone's.
Perfect. And somebody else asks in the Q&A, are there one or two recent success stories if you'd like to share them?
Okay, Ada, would you like to do that? I'm going to fix this QR code.
Yes. I guess give me just so a couple of success stories. So I guess it depends on how you're defining success. I think that what I would lean on is the people. Let me think. So when I think about success, I think about A, having your needs met, and then B, having stability. So I have somebody right now that has moved a portion of their portfolio into Sequoia Fund Group, and they had some life events that were somewhat unexpected. So they had a really forced retirement they weren't planning on. And they were looking at needing to reduce their income and affect their lifestyle. So when I first started talking to them, there was a lot of kind of analysis paralysis. And when we went over the diversification and got them moved into a debt income strategy, got them moved into an equity income strategy, got them moved into different markets, it took them from being suddenly forced into retirement due to an injury and not being able to afford their bills, putting things on credit cards, to, in the course of 6 months, being able to pay all of their bills again, being able to maintain their lifestyle, and not having a spin down plan. So because they're moving into retirement pretty early, making sure that their retirement is not dependent on a spin down plan was really critical. And so that for them, they were not someone that had a lot of expertise or a lot of experience in alternative investments. So it was a really big win to be able to access the diversification instead of just betting on, you know, this multifamily deal or this development deal or this one debt strategy or whatever it was.
Yes, so we're experiencing the opportunity to create that long term. So some of these strategies that have come into Sequoia Fund are not new to us. We've invested ourselves over time, so we've seen income from them. So I would like to address that with the question that came in about what is our vetting process. We have about a 25, 30 question questionnaire, and we spend about a good hour, hour and a half on our meet and greet with potential strategy that we'd like to offer. And then we go in and do our due diligence, and based on how they answered those questions, whether or not we'll even move forward with doing any other due diligence if we're not satisfied with it. We come back and we probably have 3 to 5 conversations that are well over an hour with those contacts after Ada and I do our crunch time. So we spend a lot of time really researching and looking into all the different things, and then talking to other operators and other fund managers that we're familiar with, that we admire what they've done for their clients, and find out, you know, where they're at with those strategies. I think we're at 10 o'clock here, Will, and there are some more questions.
Yeah. Do you want to try to answer these 3 pending questions in the
Love to.
Q&A function, and then we
Sure,
can
sure.
wrap
Let
it up.
me blow that up. Okay, so to accept trust as investors, yes. And so how would you like accredited process? I'm sorry, I can't read it. It's too small. Ada?
Yeah, I can read it. It says, do you accept trusts as investors, and how would the accreditation process work there?
Yes, and if you want to fill out the form, we can share with you what the accreditation process looks like on a fit call. That would work well. Just because it would take a little bit too much time to explain right here. Next question.
Yeah, the next question is, what kind of real estate, what kind of real rate of returns are you seeing in your typical debt/equity and fund investments?
Yeah, so I can speak to that. So in the debt space, currently right now we have everything ranging from 6 to 10. Honestly, no one is that interested or excited about 6. So we have 10.25, we have 12, which I don't know is open right now. And then we have a 15% that just closed.
Okay,
Perfect.
great, thank you. And then the last question we have in the Q&A is, does your alternative investments include art and art portfolio investing too?
Currently don't have any actual, if you're talking about art projects, we don't have anything like that in the queue. But happy to explore and have that conversation with you about what you're looking for, because we may have, if we don't have it, we probably know somebody who does.
All right, perfect. That seems to be all the questions. So I want to thank both Monica and Ada for lending their time to us today to go over all the good information that they were able to go through. I want to thank everybody who's attended the presentation live, and anybody who may be watching this recording in the future. And Monica and Ada, if you wanna end on something, please do.
Sure. I'm just really grateful for everyone's time and attention today, and we really look forward to meeting you. And please don't hesitate to reach out to us.
All right.
I just uploaded the QR code. If it's not still isn't loading from there, you can always click on the link and it'll open it and you can scan it.
Yeah. Thank you. It's loading. It was too far down on the screen, so I moved it up. So thank you so much, everyone.
Thank you.
Thank you. Take care.